Welcome to the Financial Confidence Podcast, where we help you build clarity, control, and confidence through every stage of your financial life. I'm your host, Mike Schuster, and in each episode, we'll explore real strategies, expert insights, and practical guidance to help you make informed decisions and move forward. Welcome back to the Financial Confidence Podcast. I'm Mike Schuster, your host, and today I have a good friend of mine as a guest. In from our Cambridge Investment Research home office is my friend Matt Guba. Matt is the Assistant Vice President of Client Solutions at Cambridge. Matt holds his CFP, his CLU, his AIF, and he is currently studying for his CFA, which is Chartered Financial Analyst. Matt has a degree from Penn State in economics. Matt, welcome to the podcast.
Thanks, Mike. I appreciate you inviting me. It's always great to spend some time chatting with you. I always take away something to learn, so I appreciate the invite.
Yeah, we've become friends. Cece was just asking me prior to the podcast. We've known each other for 4.5 years from day one since I've joined Cambridge Investment Research. And for those of you watching, Cambridge Investment Research is the wealth management platform Schuster Anderson Wealth Advisors has chosen to partner with, and being completely independent, Matt, you and I, is great, and that's part of what led us here. And we have a lot of these great conversations. So, but today we really want to talk about market volatility and stop fearing it and start using it. Right, that's our whole goal today, and we think there's three things out there. So let's talk about the emotional reality of market volatility, Matt. What are things that you think, people that you've seen and you talk to other advisors like me and in times like this? Because there's a lot of noise out there right now. We've had 3 great years of the market. So talk about that a little bit.
Yeah, I'd argue it's been even longer than 3 years. If you look at the past 10 or so, you can basically, track an index and you're good to go. So I think from my perspective, the biggest thing we see with volatility is the people that have spent the time and build a plan and work closely with an advisor tend to be the least concerned about it. I don't think there's anything wrong with the emotional side of it. It's natural. It's good to have questions. It's good to be fearful. It's good to try and understand what's going on. But I think when you break down who's successful and who's not, the biggest thing I see is the people that struggle are the ones that don't have confidence in their plan. Coincidence to the name of the podcast, the Financial Confidence. Those that have confidence in what they've done and what they've put together tend to be in a great spot, and it's more an opportunity to review. Whereas those who are not, I'd hope it leads them to get to that point. But they're going to be more likely in a position where things start to break down. Yeah.
And so really the next subject I think we talk about a lot behind the scenes is volatility leads to opportunity. And what are ways we can take advantage of volatility for everybody listening to this podcast?
Yeah, there are a number of ways. The first thing I would say is you're always going to want to consult with your professional financial planner to understand what makes sense for you. But there are things like just buying low and investing when assets are depreciated. You can look at strategies like Roth conversions and take advantage of that in times when you would expect more growth in the future to mitigate from a tax perspective. There are a myriad of different things that you can do. Mike, too, I would be curious if there's anything you can think of off the top of your head that you've done regularly.
Well, honestly, like you said, the Roth conversion strategy, we really are picking up the phone with them, and it really depends on where you're at too. The people that are younger, that are adding, we're talking about, hey, this is a great time to add, and we just had a 9% pullback. That was a good opportunity, and I, typically, what do we have? At least 10 to 15% pullback every year. So realistically, we haven't probably seen the volatility that could be coming. What are your thoughts on that?
Yeah, it's the probably overly used Warren Buffett quote of be fearful when others are greedy and be greedy when others are fearful. So if others are selling off and the market's dropping down, I think when you look at younger investors, they don't necessarily have as much capital to deploy. So taking advantage of a time like this is pretty much the best thing they can do because they're going to get the most bang for their buck. So yeah, absolutely a fantastic time to start looking at investing if it makes sense from an overall plan perspective. Now, things may look a little different if you're a retiree and you're in just income phase, right? It may be a completely different conversation, but there are still opportunities even for those folks as well.
Yeah, absolutely. I think the biggest thing, and you just mentioned this a minute ago, and I don't know if you want to comment to this, but we're seeing this a lot now where tax professionals, really bracket maximization and making sure that you're always paying taxes at the lowest possible rate and you're always maximizing your brackets. So those are, that's why Roth conversion is really getting to be a big issue, because people do feel like we're at the lowest possible rate they're going to see in their lifetime. And I don't know if you're seeing that across the board with people calling in and for planning help, or if you want to talk to that.
Yeah. And I think that's a good reason and a rationale for having multiple advisors. And there are multiple different professionals or industry. I don't want to besmirch anyone, but generally when I look at tax professionals, they're going to do everything they can to mitigate tax in a single year. I guess it's tax day, right? So this whole past 3 months has been focused on how do we minimize our tax bill in 2025. And I think that's part of the advantage that financial planners have is you're looking comprehensive. You're not only worried about 2025, 2026, you're worried about 2040, 2050. And so using the network of professionals is a key to everyone, wherever you are in life, to building it as sound a financial plan as you possibly can.
Absolutely. Not to sound like an infomercial, but we have collaboration as one of our core values here, and we believe in that. We don't do tax preparation. We do tax strategy planning, and we partner with our clients, CPAs or tax preparer, to help with that piece. So that's a great piece. Okay, so how do we build confidence during volatility, Matt? I know you and I talk a lot about planning, but how do we build it?
Well, not to sound like a broken record, but my goal is during volatility to have the confidence it would have already been built, right? If you are meeting with someone on an annual basis and you know where things stand and you've done, the Monte Carlo testing or drawdown testing or looked at the statistical analysis, going into a drawdown period, how much you can take before something's at risk, and it's going to help you sleep easier. You can have an idea of what to expect. Especially for people who are retired, I consider sequence of return risk the biggest risk they face, right? If you have a nest egg of, whatever it may be, drawing down on that principal in the first 2 years is going to be the worst possible outcome. So the goal really is not to enter and then try and find the confidence. It's to build up in advance so that it doesn't erode, if that makes sense.
Yeah. And I love what you're saying, because I love sequence of return risk and talking about these numbers piece of things. But really the drawdown risk, and we can show clients that through our financial planning software that we use to help clients out with and build that confidence that way. That's exactly correct, because again, we've had 3, and to your point too, 10 great years of market returns. Yeah. So you've got to prepare yourself mentally for those things that happen. Okay. So I know you're still studying for the second piece of the CFA, but I always like to ask these questions at the end of the podcast. What are you reading, or what other podcasts, what book are you reading right now, or what other podcasts do you listen to religiously?
Oh, man. Candidly, with 4 kids under 10 and work at the CFA, I don't have a good answer. All my free time from a reading perspective is going towards studying. Now, it's fascinating to me as a nerd, reading about all the different things. I am learning a ton, so it satisfies that. I would say it's not a great answer, but the Carmen Sandiego books are probably my most non-CFA focused reading, because that's what my daughter's really into. In terms of podcasts, I try to listen to a lot of leadership podcasts, not necessarily from this is how I want to act or what I want to do, but it helps me understand a lot of things that are going on and how I may want to interact with my peers and colleagues. moving to Iowa from Boston, we have a bit of a different demeanor. And then MIT also has a whole series of videos on various subjects, whether it's how to be a better presenter, or game theory, or investment financial analysis, and things like that. So I leverage that as well.
Yeah, that is great. That's good stuff, because I can relate taking the Certified Private Wealth Advisor certification. And then I end up digging into things deeper that I find, like behavioral finance. But anyways, Matt, thanks for being a guest today on the podcast. I really appreciate it. Behaviorally, and this fear of volatility is something that we have to address with people, and the things that you can take advantage of it. So thanks again for being a guest, and thanks for everybody tuning into the Financial Confidence Podcast.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Fixed insurance is offered through various independent insurance companies. Cambridge does not offer tax or legal advice.